very briefly, I also want to get your perspective, Jan and Michael, especially when it comes to the opportunities, Lagos versus Abuja that we alluded to. Hakeem, we also didn't get very much clarity, too much clarity with regard to the affordable housing space, but we can come back to that. Bolaji, if you have anything to share, please go ahead.
Yes, I mean, in terms of the sort of investment opportunities, most of the investment capital has been sort of allocated to prime grade real estate, whether it's in the commercial sector, the real estate, the retail sector, and also in the hospitality hotel sector. And you know, I think that from a balanced portfolio of investment and looking at where the country's economy is and where it's going to be growing, too, there is space for, I wouldn't sort of say B grade, but you know, a lower grade in terms of the commercial sector. You know, A grade, you know, attracts multinational corporations, banks, financial firms, oil and gas companies when they were in the market. But the vast bulk of the Nigerian companies, you know, can't afford A-grade sort of offices. So, you know, we can build more offices just to target a small sector of the market, or we can sort of look to start building offices for a much wider sort of sector of the market. You wanted to sort of talk about Lagos and versus Abuja. Obviously, Lagos is both a financial center, as a commercial center. It's where most of the corporations have their head offices. You know, I think in the past, you know, Abuja has been looked on by investors who hadn't been able to get access into the Lagos market. They also looked on because, you know, the government sector or the public sector was growing sort of very rapidly. That's an area that's in contraction. You know, but there is still quite a lot of wealth in Abuja, and I think it will still do well. But I think the main focus for most investors, I think, will always be Lagos.
Jan, your perspective, and Michael?
Well, we're currently building 2 more developments in Abuja, and the main reason for that is that it's just easier to acquire land there versus Lagos. Lagos is far more complicated, potential land claims, the history of the land. When Abuja, you can trace it back past 30 years and it was vacant land, it didn't belong to a specific individual. So it's much easier to develop there. In terms of our focus, we believe that's enough for Abuja at the moment. We're opening Lekki Mall next week. We would like to do more similar Lekki malls in Lagos, but to find a piece of land of that size in Lagos is not easy at an affordable price that makes the viability work. So it is basically, it's driven by availability of land. I think that's the most important factor in determining where you can develop. We as a fund have decided to just focus basically on Lagos, Abuja and Port Harcourt if we can find land, but nothing outside of those 3 metropolitan areas.
For us, Lagos, we toyed with a development in Abuja, but Lagos, the fundamentals suit us. We also like to be able to access our sites within an hour. So we have a strong office presence in Lagos, and 20-odd million people, there's still a huge amount of work to be done. So we're very happy with Lagos. Spent about $100 million there already, and we've got a lot more earmarked. We may look elsewhere, but there's no pressure for us to do so. In terms of the asset classes, we're a private equity fund, so mixed use becomes a little bit complicated. But we do retail, we do office, and we're looking for industrial. But we see growth in retail terms in value centers, smaller value centers on the mainland in Lagos, not on the islands. We think that that's done.
And I take it that makes your assets more competitive.
Yes. Unfortunately, there are no value retailers. So there's a lot of work going on behind the scenes to attract value retailers into West Africa as a whole. We are building a large twin tower A-grade office development in Lagos. After that, that's it. So Tolly, you can relax. But we'll be doing B-grade on the mainland because the corporates, the international corporates who are attracted in a way to the investment grade assets on the islands are looking for more affordable space on the mainland, and you'll get the same covenant, it's the same entity. So we see a big opportunity there, and we'll be rolling out some projects on the mainland quite soon. Then industrial. Industrial is a big, as we heard earlier, it's a big opportunity, and for us, we're looking very carefully at healthcare and education as well. So both of those, but mixed use is complicated for us.
Nothing much has been said about affordable housing. I know in Laggard as well, there has been some housing developments that have taken place there, but Hakeem?
Okay.
Both mics are on.
I mean, I think there's been quite some development in the country the past 2 years around mortgage reforms, which has created the right framework for people to play in the category of which we classify as affordable housing. Because we've created the NMRC, because the greatest challenge before was the fact that there was no institution to create liquidity in the mortgage sector. But now NMRC has come on board, the underwriting standards have been launched, and now if you originate mortgages, there's an institution that can easily buy off the mortgages, and you could originate further mortgages. So that has created very strong impetus for affordable housing, because now have access to mortgages. Lagos, Abuja. I've done 5 million projects in Abuja in the past 6 years. I'm just running on the 5th one. Abuja, and I agree totally with Abuja, with Olajo and Abuja. Abuja rode largely on the back of government patronage. That's slowed down considerably. But Lagos is a commercial center. From my experience, I have projects in 8 cities across the country, but there's nowhere that can compare with the depth of the Lagos market. So we're going to retain a very strong presence in Lagos. I will do little bit of business all over the country, as we see the opportunity also emerges. So Lagos is the market.
Okay. We will double check with the audience if there are any questions, opinions of you. There are the hands. Thanks for saving my voice. We'll start with you, sir. There's a hand in the front and the lady over there, and there was a hand over there. Unfortunately, due to time pressures, we'll only take those 4 questions. We'll try and take them in. Is there only one roving mic available? Because what I consider is that we'll take 2 questions, get a brief response, and the next 2 questions. That will help. Go ahead, sir.
Yeah, I'd like to get the panel's view on the ongoing viability of the Eco-Atlantic and the ability to balance developers' returns, given the cost of the land and access to funding and demand from tenants, and balancing that with leaving some returns on the table for future asset owners, and the overall impact on the real estate landscape and rental levels in the market.
If they'd like to come to the front to address another question.
Hello, yeah, I'm Tola and I work with the Standard Bank Group. Just trying to find out from developers who we've supported over time, what is being done within the retail space, given the challenges to attract more tenants both internationally and also to develop the local tenant space. Because I think that is very key for the growth of retail, and the understanding given the feedback is that there is more scope for growth, but to enhance that growth and to ensure that the returns are right, then there will need to be more tenants to fill up that space.
Thank you so much for your question, Tole. Mike will make its way to the lady at the back and then to the gentleman to my right. Brief responses to these questions, please, if you can. Anyone open to the floor?
Maybe just on the retail question. We certainly recognized quite a while ago that sustainability of retail development in West Africa as a whole, but Nigeria in particular, would depend on attracting new brands to come in. And those would not be South African brands, they would be European brands. And we embarked on an expedition 3 years ago, first of all to the UK, because of the strong affinity between West Africans and the UK, and then to the Gulf, and then to Turkey. And we've been talking to foreign retailers for a long time now. Managed to get Debenhams to come in and express interest. We've been supporting SmartMark by bringing new brands to them. But it's a very difficult story to tell at the moment. And the general theme from international retailers is that they will experiment for Africa in Nairobi at the Two Rivers development. It's very specific. And if they do well there, then they'll look at the rest of the continent. So they still have a very homogenized view of Africa. So I pray that Two Rivers is going to work. I know that there are some people in the room who heavily invested in it. I really hope it will work, because then we'll get a transfer of interest. But it's been slim pickings to date. We're not giving up because it's a major issue. We have to resolve it.
Brief response to the other thing?
Yeah, and meaning what we've even gone to add on to what Mike was saying is where we can't find operators, we're starting to do it ourselves. For example, we saw a niche need for a kids entertainment area within our malls to try and keep people there longer, because if the kids are entertained, the parents retain longer. So we're investing ourselves in bringing those brands to the country. We're trying to work with retailers, but exactly as Mike has said, this is a very difficult time to convince someone. Everyone is interested, but it's a bit of, let's just see how this plays out over the next few months. On the question on Echo Atlantic, meaning it's a beautiful development, I can't fault them for what they're doing. We've looked at it, and for us the numbers just do not work for retail developments. We can't, meaning, in my opinion, you'll have to start trading across a number of floors. And it's something that we as a developer are not convinced that it will work yet. So maybe if someone else can crack it, I know Hakeem has said that they're trying. It will be great news, because it means we can use a smaller footprint to make it work. But at the moment, we're personally a bit skeptical on that.
Balaji, you respond? Oh.
Sorry, I wanted to just add. Well, I took a similar view on Echo Atlantic. And my response was simple. Echo Atlantic is being built for 500,000 to 1 million people. So I said, okay, add another 4 million, that's 5 million. The country of 180 million. What is the real estate need of the remaining 175 million? And I just focus on that. And that's exactly what I'm doing.
Well, so talking about Echo Atlantic first, I mean, it's obviously a very ambitious sort of project, and you know, I think that sort of similar, you know, large-scale sort of development sort of projects, whether you look at the Docklands in London and otherwise, you know, it suggests that these are sort of 25 year plus sort of projects. And so, you know, I think at the moment, you know, where the economy is, you know, I think it's unlikely that we'll see a huge amount of development sort of happening there. But, you know, I think that in the long term, still so positive about it. On the retail side, so going to Tolu's question there, obviously we you know, Brawl has been very sort of influential in the sort of retail sphere in Nigeria over the last sort of 12 years. We've been involved in the sort of leasing up of the Palms in Lekki, Ikeja City Mall for clients who are here, R&B, Westport and Actors and others. And so we've always been conscious that there haven't been enough retailers in the market, enough breadth of retailers in the market. And we've been working with our landlords, R&B, Actors, amongst others, and again, go into the Gulf, go into the going to Europe, to UK, to conferences all across the world, to try and get new brands into Nigeria. We have been successful with brands like Karen Millen, who've just got to come into the country. Like we're working with Carrefour to India, launch an expansion in the country. But you know, yes, new brands do need to come in, and but Blol is at the forefront together with some of the landlords in bringing those brands in.
We're going to take the last two questions very briefly due to time pressures. You can go ahead, ma'am.
Sorry, with the new office developments taking place in Victoria Island and Lekki and so on, how do you perceive market rentals? Have they come down dramatically? And where do you foresee your tenant supply coming from? And as well, are you now seeing that you're having to offer tenant incentives in the market?
As one of our panelists responds to that question, only one, due to time pressures, please. And the roving mic will make its way to the gentleman to my right to ask his question. Who's going to bite the bullet?
I can quickly go. These guys are probably more qualified than I am, but certainly rentals have come down, absolutely no doubt. You're talking at, for A grade, sort of $1,000 per square meter per annum, and now you're hearing numbers like 700, 750, even 650. So it's more of a tenants market right now. And I think, how do you attract tenants for new office developments? I think that's the key to, bespoke solutions for clients, your ability to sell, your ability to show them that you can execute and what you've done in the market. So I think there will be pickings. I mean, all these corporates that we've spoken about that are coming into the market will need head offices. And those are the ones that you've got to approach, and those are the ones that you've got to sell on your ability as a developer, obviously the piece of land that you have, to deliver the product that they're looking for. So there will be opportunities, but not at those same rentals that we saw a year and 2 and 3 ago.
Thank you so much, Warren. Your question, sir?
Smart. I just wanted to reiterate our sort of support for Nigeria. I think we're about to open as an anchor in Yan's shopping centre next week, and we're opening our 5th store. We are looking at another 3 potentially in the next 2 to 3 years. I think the biggest, so we still see a massive opportunity, and with that, opening Game, that's our Game brand that's opening there. We have very successful, been very successful in the Palms. But I think the biggest thing that's holding us back, or that's not allowing us to invest, comes back to the gentleman over there's question, is the cost of land, and developers being able to secure land and then effectively get their yield up that they require out of it, and pass through a dollar rental, whereby when we've got a large American shareholder where we have IRRs that are risk adjusted, and we need to make those IRRs, and for us to be able to afford that and get the sales out of a store, the rental is just unaffordable. And it's not a Nigeria problem, I think it pretty much extends to a lot of our opportunities in sub-Saharan Africa. So I suppose my question to the panel is just, do you see that changing? And if not, retailers that are keen to come to Nigeria, if they're finding it increasingly difficult just to make the numbers work.
Any one of you keen to respond to that question?
I think we're not going to see a major decrease in rentals in the next few years, but definitely what we've been trying to do, and us specifically have been successful in it, is just keep an halt to increases. And we've done it through basic things like direct procurement and just being a very hands-on approach. We have like 9 expats just living in the country, just managing our various developments from inception through until we open the doors and managing the asset afterwards. So we're constantly looking at ways to reduce cost, and at the end of the day we can pass those savings on to our tenants. We've seen now in this difficult time, it is a very rental sensitive, prices are very sensitive to the tenants, and any cost saving that we can pass along, we surely do that, because it's in our interest to keep the tenants there. Meaning we don't want to see any tenant fail, just as we don't want to see any developer fail in that country. We brainstorm a lot amongst one another sometimes just to try and come up with solutions and bounce some ideas off one another as well.
And then we think you're competition, huh? We'll leave it there for today, ladies and gentlemen. Unfortunately, I have been quite selfish with your time. Some of the breakaway sessions have commenced, but what is evident is that whilst there are challenges, but the companies that manage to survive in Nigeria through these turbulent times are certainly setting themselves up for success in the future. Thank you very much to the panelists for participating. I know I've been very selfish with your time as well. Perhaps an hour for this conversation would have been better, but again, these panelists are available for ongoing conversations between yourselves, members of the media, and fellow stakeholders in the property sector for further engagements on the opportunities in Nigeria. Thank you so much, ladies and gentlemen.